Hello again, everybody. It's Harry Boxer, the Tactical Trader at thetechtrader.com. It's Saturday morning, the 21st of October. This is the weekend webinar. Well, folks, the market made a decision about what it wanted to do, whether it's going to break out or break down. It certainly had a hard hit. You take a look at the S&P 500, we're just above some key support at the 42-20-25 area, which was reached a few weeks ago. And if you look at the overall structure, it's a 1-2 wedge, 3-4 wedge, fifth wave underway. Now, fifth wave can be truncated or shortened and sometimes double bottoms and goes up, but right now the market's in a precarious position, not only seasonality-wise, but several other factors have come into it. And I don't see, unfortunately, you'll see a little later on, I don't see the extremes that we often see at lows. I'm concerned that this is going to have a hard hit next week and the week after perhaps, but sometime in the next, 2 days to 2 weeks, perhaps, we're going to see a dramatic, I think, drop and pop. Maybe a great opportunity. Usually you get 5 waves down and you'll rebound. We had larger 5-wave move here, 1, 2, 3, 4, 5, which resulted in that. Now a smaller 5-wave move could result in a smaller move, but it could result in even a retest of the highs up here in the 4,600 range. And as some of my associates and colleagues have indicated to me, they're looking for 4,800. I can see 4,900 the way this looks if the market wants to call this a 1, 2, 3, 4-wave move and up. Right now, it's a precarious position in the market, and you'll see some of the technicals, particularly the chart patterns on the NASDAQ 100. Generals not looking good. Market leaders like Tesla have broken, and NVIDIA is about to. I'll show you those a little later. But for now, they're very concerned from a technical standpoint about the precarious position the market's in. If we should gap down, for example, on Monday, we could plunge all the way down to 4,000. I'm not kidding. Quickly, maybe even under that into the high threes. Sometimes they do that, they'll spike under the channel. Now, there's a big zone of support between 40.65 and like 41.65 in that area. 40, there's about let's call it 50 to 75 point range where this thing could plunge into and then bounce, maybe. That's the S&P. Let's look at the NASDAQ 100. Kind of looks the same, a little different, holding up much better, or it did. You can see that the pullback lows in June, and we had more in later in June and then again in August. And then this big one, September the 27th, where we hit 14,432 before the bounce of about 800 points. Now the rollover, again, it's a 1, 2, 3, 4, and the fifth wave's underway. You can see that the angle of ascent, and I just want to redraw this because I want to show you something. I think that was actually the angle of ascent. I think what happened is they broke the channel. They came down to support and bounced, did a kiss back. Now we're rolling over. This could be just the start of something very nasty. The average bear market, can be 30 to 40% or thereabout. We've only come down about 8 or 10%. Not even that. Take a look at the high here in NASDAQ, just about 15.9 to a low of 14.4, 1,500 points. So we're down about 9%. Folks, we may be just getting started. Seriously, I don't want to turn Harry the Bear on you, but I will tell you this. A picture's worth 1,000 words. Right now, what we're seeing is a potential breakdown. And if it should gap, or even if it should just plunge underneath this level, we could come down to 13.3 very quickly. That's 1,200 points on the NDX. It wouldn't shock me if it happened in a day or two and creates a bounce back. But all that does is basically do a 1-2. Coming off a high like that, we could be 3, 4, and 5 and be down 11,000 sometime next year. I don't know. I'm just giving you theoretical stuff, of course. But what I'm more concerned about is very near term. The key support is between, say, 14,275 and 14,432. So there's about a 150 point buffer in here. It is this zone. But should that be taken out, we could plunge down to 13.9, 13.6, even as low as 13.3 would be a possibility. That's 1,200 points, as I said. We'll have to just see where we stand. And again, don't misconstrue what I say as being ultra bearish. I'm just extremely technically concerned. And The next day or two will tell the tale. Now the market can still bounce here, hold this support level, and rip. Right now it doesn't look like it when you examine the individual stuff. Let's look at the transportation index, which, by the way, had a pretty good day on Friday. With the NASDAQ, I just want to point out that the NASDAQ 100, the NDX, which you just saw here, for the week, lost 2.9%. The S&P lost 2.4%. The IWM lost 2.4%, but the transportation only lost 1.7%. And on Friday, actually was up a frac. The only index to have a gain, up 14.59 or 0.1%. It doesn't sound like anything, but maybe an accomplishment. I will say, the transportation is going nowhere until it gets back over 15.3. And on the downside, lateral price support somewhere in that zone at 13.3. We have a long way to go down to reach a key support area if it doesn't hold right here. Now, in essence, drawing a line off these lows here, and I'm going to redraw this for a reason. Usually, you don't draw it off the V low, you draw it off the first pullback low, and then the next lows are in here. Still, a nominal break took place on Thursday, and the snapback may be all she wrote. This too has a 1, 2, 3, 4. Fifth wave could plunge down in this range. I am obviously looking at all these indexes and see similar breakdowns. It's a major concern for me. Technically, small caps are actually leading the way down and really plunging. Now, although they didn't have a terrible day, it's exceptionally terrible. It was as bad as any index last week. Almost something like that. Let's see. So we've gone from 190, nearly 199 to 166. Lost 33 points on an index. It's just since July. If you look at this long pattern going back a year and a half, massive base with a double, triple bottom here. We're coming in to support that level, to test that level. You can see that if it breaks there, it might be headed to test this zone from way back 3.5 years ago. But you can see where we can go if the market takes out these lows in here. Really important. If we take out 163, we might see mid 150s or less. So this is a nasty looking index. Actually, all four of them, S&P, NDX, transportation, IWM, all are in a downhill racer mode. This one happens to be near the bottom of the channel, and so is the 20. The NDX and the S&P are different. NDX, the best of the lot, still up about 25% on the year, but down from like 36. So we've lost a good chunk, like 1/3 of the gains for the year, while the others just collapsed. Dow is down on the year, and several of the other indices are actually down on the year. But the NASDAQ generals are now breaking. Let's take a look at them in a moment after I give you some interesting technicals. The McClellan oscillator, this is one of the major concerns I have. Usually markets will see this in a 250, 300 range down here. Let's look way back here. And this goes back 4 or 5 years. Note here, there, and there. And even a couple of occasions here, there, and there. We've reached minus 240.50. It was minus 340.50. At one time, way back when, do you believe minus 480? That was back in 2011. I'm not sure what caused that, but here's the bottom line. We were just on Tuesday, excuse me, they were up plus 124. Not quite overbought, but on a short-term basis, as overbought as they've been since July. That causes pullback. I don't think until we get to minus 150 to 200, at least, maybe more, is this market finished. Now, we may do that Monday morning if we can get a rollover collapse. Kind of anticipating something like that. I'd almost like to throw the baby out with the bathwater. And folks, also, when you see that kind of move down or down to a low down in that range with the McClellan oscillator minus, 185 to 200 minimum, maybe 250 to 300, if you get that kind of action, you usually get a negative tick in minus 14, 15, or 1600 range, something very, very negative. We haven't seen anything more than 1200 recently on the negative side. So, and in addition to that, when you look at the amount of stocks that are trading over their 40-day moving average, that's plunged to 18%. Historically, we got to get down to high single digits to, you know, the 8.5 to 12 zone before we get a really oversold condition. Notice this 1, 2, 3 big drop here that took us from plus 80 to 797. And here, plus 80, we only got down to 12 and change. Recently, we hit 12.6%, almost the same as we hit back in March. And that's one of the reasons why they may have bounced. But I'm not happy with the rollover we've seen. We're making lower highs and lower lows. And I got this feeling we're going to see this down in the 10-12 range or something like that. So if we do see that, the percentage of stocks above their 40, if that drops dramatically and any plunge in the market or sharp move down in the next day or two might get this rather steeply or oversold. I want to see the combination of the those indicators and the VIX is another problem. The VIX, I think Susie said the VIX was broken. I don't think it's broken. I just think it's, you know, based on a combination of factors. When you look at the McClellan oscillator, that's comprised of advanced declines with up-down volume. We haven't seen 10, 12, 15 to 1 negative ratios. We've only seen, you know, 3 and 4, 6 to 1, but that's got to get worse. This has got to spike into the 29 to 35 range. If that happens, the UVXY and UVIX may be great trades. And if you take a look at the patterns I'll show you later on those, you'll see that they may be emerging. So we're at the precipice of a plunge in the market and a spike up in some of these ultra-short ETFs, which we've been trading daily. So that's a look at the VIX, the McClellan oscillators, and you can see they're not extremes yet. Okay, so I'm very concerned that if we do plunge here or crack support, it'll get into a panic mode, and then you'll get the setup we're looking for. Now, when I show you charts today, and I'm not showing you as many longs as normal, but I'm showing you way more shorts than normal. Market is set up that way, which means a lot to me, but it also means that we may be at an extreme coming down, very short term, that would be tough to initiate new shorts unless this thing, you know, just collapses and is weak on a bounce and continues to stair-step its way down, and over the next week or 2 or 3, even plunges into the high threes. Wouldn't be shocked to see a move. It takes us down to 3,800, where this major double bottom it was created back early in that last year. Okay, now let's take a look at some of the ETFs, which will be elucidating. These are the 3 I follow closely, the semiconductors. Well, folks, semiconductors led the way up. Look at these multiple waves up. And then a 1, 2, 3, 4. This is very similar to what we're seeing on the NASDAQ 100. And obviously, the semiconductors lead the way. 1, 2, 3, 4, and the 5th wave's underway. Now, where can that stop? Well, if it doesn't halt at the recent pullback low, 139 3/4, 140, it may plunge into the 135 area. And there's an outside chance it could really get hammered down towards 130. If we get that kind of a plunge, that may set up, you know, that would be probably in the midst of what we're looking for in terms of the oversold condition. So that's why I'm concerned about the way the SMH looks. We take out, and the key support right now is 139 3/4, 140. If we don't hold that quickly and bounce, we probably will come down and spike down into a breakdown low. Financials look terrible. Look at this. 1, 2, 3, 4, 5. And this is a bear flag, a rising bear flag. We're at or near the lows from March. That low is a little lower. It's down at 48.86. We have about 4.5 points to get there. We may do that Monday morning. We see that there's a major triple bottom down there. Look what happens if that is collapses. There's a huge down channel that's going back a couple of years now on the financials. It's seen this go from 158 down to 53. That's right, losing 2/3 of its value. Now, obviously, we had a banking crisis. A lot of banks merged and taken over, went out of business, whatever. The big boys, though, this is an indicator to me. It's a triple bull. And when it's coming down that fast, you know, the FAZ, for example, the opposite, is starting to ramp up. With targets of 23 3/4 and 26. And finally, the dire looking biotechs, look at this plunge. 1, 2, 3, 4, and a big fifth wave consisting of 1, 2, 3, 4, 5 waves down. So biotechs look terrible, as witnessed by the LABU, which is probably going to be reverse split any day now. Folks, this has gone from 185, I kid you not, to 284. It's very, you know, this is very much like UVXY. Over the years, that's reverse split. I bet you it's 15 times. Take a look at this. No, and this is not unreal. According to this, on a reverse split basis, this has gone from $9,500 to $19. A lot of room to run, indeed. What are the targets now? 21 and 23 3/4 are near-term resistance. So something up in that zone short-term may occur as early as Monday, Tuesday, if the market starts to, you know, get hammered and plunges. So it could be a good day trade for the UVXY and the UVIX, which you can see is also right at lateral resistance here, and it should break out at least a retest of that double top there at 51-ish, 53 quarters, which is 7 points from here. Could quickly happen. You're gonna have to be quick and nimble though. You're trading these two. Well, anyway, so you can see that the biotechs are horrendous, but oversold at the bottom of the channel. Not that far though from double bottom price support. On the other hand, that's about 63, and we're near 67. So you could get a quick hit down and a quick pop on the opposites. The LABD, for example, you can see how this is up against this zone, quite up against it, but that would be your target zone. Let's call it, if we do get a spike up, 29 to 31 would be my target. We're at 26.40 now. So keep an eye on the ultra shorts. Next day or two, they could be very productive for trades, but you got to be quick and nimble because when they reverse, it's going to go against you pretty ugly. Okay, other ETFs that we follow closely that are important. We're looking at oil. USO is in a beautiful, well, first of all, as you know, I was bearish on oil after it showed me what looked like a topping pattern. It kept stair-stepping its way lower. So from that 80 area, we went down as low as I think was high 50. What was the low there? 58, 57 and change. So we dropped about 22 points here, based out, broke out, and we had a 1, 2, 3, 4, fifth wave is underway. If it should take out 83 and a quarter roughly, we could see 88.90 to retest that high from a year and a half ago. So oil is in a very solid uptrend. And here's the GUSH, which is a little different. It's a double bull. This one is based on oil and gas stocks versus USO is a commodity. So that's why the GUSH, for example, is with the market pressuring stocks, this is not done as well. But anything now above, say, 42.5 3/4 could get you to 52, 53 pretty quickly. So there might be a good trade in there too, but wait for the breakout on that one. Did not have a good day Friday because the market was down sharply. It took a lot of oil stocks down despite the commodity being up. Gas, well, Boyle has been all over the place, up and down, up and down, up and down. But you can see that recently has pulled back with the KOLD making a move off of key support. But both of them are in a place now where there's be support on one, resistance on the other. I'm not seeing the ideal situation in natural gas right now. What about gold? Well, if you look at the GDX, it's a 1, 2, 3, 4, 5. So I'm not surprised we rallied back to the neckline. Friday was a reversal off the neckline. Maybe we pull back in the zone. If we're really looking, if anyone here is looking to really get involved with gold over the next, few days and weeks, look for a pullback in GDX near 28, 28.5 zone to create kind of a left shoulder head and maybe a right shoulder. Then once it gets to 30, we're on the way to 33, 36, etc. So the timing may be close, but not exact right now on gold. And that includes NUGT. Same thing, NUGT, 1, 2, 3, 4, 5. And this one, though, broke the trend line, is up against resistance. It's backed up. So the NUGT 29.5, 30 zone is a place to be buying that one. As you know, I like JNUG as well. Very similar pattern, but not as strong as NUGT. So at this point, I'm favoring NUGT over JNUG. And I like the technicals as well, a little better. So folks, we've covered gold. I want to take a look at silver. My favorite is AGQ. 1, 2, 3, 4, and a big fifth wave down and snap back. Silver just doesn't look as good as gold, not yet. We'll see what happens to some of its gold and silver stocks. Okay, got a lot of longs to show you, and I got some shorts to show you. Let's get started. ACMR, look, folks, I'm going to tell you right now, the semiconductor group looks horrendous to me suddenly. This one is an exception, but it doesn't mean it's going to hold this trend line. But if it gets to the double top near 21, you might see 25 and 28. On downside support is 15.5, ACMR. ACXP, exceptional, explosive move. I've seen this go from $1.1520 to $8.82 and then pull back, and now it's forming a wedge pattern. Key support, and the stop must be under 4. Above 6.5, we're looking at 9 or 10 or 11. Keep an eye on this one, exceptional strength in a weak market. AEHR, one of our favorites, has been in a long uptrend, but I got to tell you, folks, it's broken lateral price support and a big gap, tried to fill that gap, and then rolled over hard. Check this out. 8 days in a row. Usually when a stock's down 8 days in a row, the 9th day is a buying opportunity. Should I see 30 on this? Maybe it snaps back. The problem is if the market's plunging, this could very well get into the mid 20s, mid to high 20s. So be careful on this one. Bottom line is the long-term channel has been broken. The technicals have deteriorated. I'd be awfully careful to do anything but day trade or scalp this one. AEO, some of the retails are phenomenal. Look at American Eagle Outfitters coming out of a base bet. This is the highest level we've seen in almost 2 years on AEO, and you'll see a couple others later on. Target 19 and 22. Don't know if he gets there, particularly in this market, but you can see, and you can see it plunged or pulled back a couple days in a row towards the end of the week with the market. AI, well, everyone loves AI, but not I. When I told everyone that it breaks 31.5, 32, I'm sorry, 30.5, 30.75, that was a stopping point. Subsequently, it's dropped all the way down to 23 and change. It's forming a bear flag, and it's in a down channel. I don't know why you want to be long the stock. ALHC exploded with a breakaway gap through a major base, and I put a swing on it. There was zero follow through because the market got hit. It's now pulled back into the gap. I think it resurrects the trend, but the market's going to have to cooperate. Right now, let's call this the angle of ascent. And this might be support area right about there. I'm not sure the market, this can withstand a market slide. But just keep an eye on it. It could be an interesting stock. ANF is the other retailer that I really like. Amazing. Abercrombie and Fitch. A year ago was 14. And earlier in the week, it hit 60, almost 65. So we're talking about a stock up more than 300% in a year. So obviously it's vulnerable to a pullback should the market pull back, but look at that relative strength. APLS popped here, we put a swing on it, it worked, and then came down. I still like it because it didn't break the moving averages or trend line, and now it's got a little flag. Unfortunately, there's a double top. We got to take out something around that 50, 50 and a half, 51 zone. Then we may be looking at 65.70. APLT popped out, we put a swing on it, but it pulled right back with the market. Not a surprise based on what I'm seeing, but this one needs to be stopped under 2 and your target's 4. APP, I want to point out how phenomenal the stock is. It's been broke out here. We put a swing on it. It's been beautiful ever since. It has a 1, 2, 3, 4, 5 wave move. This is the 5th wave consolidation, I believe. I may be wrong, but if it pops 45, 50, and 55 might be targets. The stop would have to be under, and it's right there, 37. Careful. ARDX, a beautiful rising channel that took it a year to develop, taking it from 50 cents to $5 tenfold. When the stock goes up 1,000%, we often see this kind of consolidation, retest, etc. Easy to stop under 315, over 4 1/4. You might see 5 and 6. ARLP, exceptional pattern. This is in the coal sector, coal stocks and material stocks in general, uranium, coal, and oil, and basically natural resource stocks have done very well. So this one broke out, we tested, and it's trending. Although Friday was a bad day for it, I still have the target at 27. AUGX, after it popped out of the base and formed the wedge, we put a swing on it. It worked out well. It's got a rising configuration. It tried to break out a week and a half ago by tagging 597 short of 6. The target remains 7 and 8.5 if it continues. Biohaven, suddenly after getting crushed, not sure what this is. It might be a split. Doesn't look like it. Yeah, it looked like it was supposed to be a takeover, and then something happened. Bottom line, it's in a rising channel configuration. It broke out 2 weeks ago. It pulled back and tested, held support, ran up again, had a revert engulfing positive day of 3.5% or almost a point on Friday in a lousy day. Maybe something clicking here. 32 target. BNOX explodes, pulls back, pops, and getting tighter and tighter. I don't know if it's going to pop, but the target's just 7 and 10 if it does go. Key support now, about 330. BRBR, check out this packaged food company. All brands broke out right there at about the 29 range and it's continued to run. Good or bad market, made a new high this week at 44.90. The target is 52. CAMT, one of my favorites, broke out, ran up, broke out again, and then rolled over hard this week, very hard, breaking support, trend lines, and moving averages. So you should be out of your short, out of your long, sorry. Matter of fact, if you see a stock like that that broke, bounced back and flag, it may be a short opportunity. CCJ, now the uranium stocks look good, but this one in general, I'm concerned about because it pulled back down and now it's bouncing around, forming some sort of bear flag. If the whole group runs, this will probably recover and get up to my $45 target. I would implore you to keep stopping this one under 35. Celestica, fabulous chart. The highest level we've seen in 20 years, but vulnerable to pullback should the market pull back. Support would be about 24. Resistance 27.75 and a target of 29.30. COUR is a very solid looking little educational stock. There's your pop breakout, coil, ran up and now it's consolidating beautifully as long as it holds support, which right now is at 17.5, and we're close. If it does pop, 21 target. COYA, a very thin, low price biotech that popped here and then pulled back and double bottom, then it popped again, and it's flagging here. And should this get above 5 1/4, we might see 6 and 7.75. Big things happening there, I'm hearing. CRNX, breakaway gap, flag, pullback, wedge. Nice day Friday in the midst of a lousy market, up 3%. Should it get through 31? I'm looking for 36.7. CROX. Well, CROX is something to watch. It's on my short list. It remains on the short list until I see a breakout. If it breaks down from here, looking for 76 and 64. Daktronics, a very unusually strong stock. But in the last month, it's been quieter, consolidating. Should it pop? It's a possibility we could see the stock at 12, 12 and a half. However, I need to keep a stop on under 8.5. DBI broke out, pulled back, we put a swing on it, but it back and filled and back and filled. And Friday it came down to the trend line. If this is in a very precarious looking, and at 11.05 low, breaking through 11 would get me to stop out of it and move aside. Same with DBRG. Broke out to a new high, pulled back, and then now it's in this. This is a tech trader swing that may be breaking down. As a matter of fact, I think it broke on Friday. Trend line, etc. Actually, when I look at the trend line, that's it there. This is the kiss back, and that's the rollover. Last support, 14.75. Below that, look out. I'd be out of this stock temporarily as well. DraftKings may be a very similar situation. After a beautiful run up that saw it go from the January low around 10.11 up to the mid 30s, it's consolidated, but it broke down last week through the trend line and dipped under support at 27.20. Last low of support would be 25.40. I'm concerned this may be rolling over and break down too. Phenomenal aerospace defense stock, Leonardo DRS. Look at this chart. And it finally broke out of the 4-month consolidation. Took a run from 1581, 19.5. The target is 21.22 zone if it continues. Duolingo, another tech trader swing short that may have broken on Thursday. It's at support. It's near the trend line as well. Any further damage, and you need to be stopped out of this one. DVAX, a really nice looking bio drug manufacturer. Nice pattern here after a big run. It ran from 9.25.5 to 15. It's got a little mini inverse head and shoulders or cup and handle. Takes out 15 and change, 16.5 and 17.75 are targets. EDU continues, although it's pulled back for the last week and a half. It's still in a nice looking uptrend, and it may extend if the market cooperates with it. But you'd have to stop for me on the 57. ETHE, well, crypto stocks have had a great time of it of late. This one popped in June, July, and then went sideways for 4 months, but it's right there, looking like it wants to break out. If it does, the two targets are 13.5 and 15. FNGR, as you know, we traded it here, and again there. It's done very well for us. This time, though, even though it popped over 7, getting up to 7.25 on Friday, it closed very poorly at 6:30. Negative reversal day. I'd be awfully careful with this one. Stop is under 5.75. FRO in the transportation oil and gas group. Beautiful breakout over triple top, and it continues to run. Not going to be surprised to see 24 or even 26 over the next few days and weeks. FTI also in the oil group. Strong chart. Wanted to show it to you. Your stop is under 18.5, and your buy stops over 21.70. Because then you're looking at 24, 26.5. Another crypto stock, Grayscale Bitcoin GBTC, broke out early in the week and it was up every day for the last 6 sessions, closing at 23.64. That's a breakout level. Mid-channel target now going to be 26.5, upper channel 32.3. Geo popped, we put a swing on it, pulled back and then popped again, but couldn't get the resistance. Pulled back pretty gentle. Friday was actually an up-day reversal day, engulfing reversal day for a stock like that. Keep an eye on it. The targets are retest of 9. Then we're looking at 11. GPCR, powerful stock. And there's another example of a big gap and a wedge that often will go higher. So that's why I'm looking at those other 2 stocks we mentioned earlier as potential trades or swings. My target is 80 for GPCR. Hudson, beautiful uptrend. Beautiful rising channel. It's been in one for 6 months. Near term, I would have to put a stop right about there on the 12.75. The target though is 15 if it continues. Coal stocks in general strong. HNRG is another coal stock that I think is going to 17.5. HPK is a tech trader swing in the oil sector. Even though it pulled back Friday, firm resistance. My targets are 20 and 23. IMNM, beautiful looking rising channel, 1, 2, 3, 4, fifth wave, maybe a 1, 2, 3, 4, 5. We don't know, and it may have double topped. But should it get through 9 3/4, I'm looking at 11 and 13. IMBT, now there's a big pop in coil, along with SOLO, SLNO, and several others, BNOX. It's promising, but you've got to put stops under the gap, under 32 out. Possible targets, 38, 45, 48. KTOS in the aerospace sector, a beautiful rising channel. In this market, you betcha. But stop under 16 and a quarter. Over at 18, I'm looking for 19 and a half, 20. LFMD, a tech trader, ongoing swing is acting well, consolidating beautifully. I'm looking for 8 3/4 and 11. LIPO, what a move last week. This has gone from 85 cents to 3.30 in about 6 days. Obviously, the big pullback on Friday has this in a precarious position. Be careful. LMB, phenomenal rising channel. It's taking this stock from 5 to almost 40, 5 to 38, and now the pullback falling wedge. Still, I'd have to stop it if it broke down underneath 27 3/4. The targets are at 32, 36, and 39. 37, sorry. LDS, that's on my tech trader short list. We'll get to it. MIRM, a long 1, 2, 3, 4, 5, and then a pullback. That's wave 1 and 2. This is 3 and 4. Fifth wave target is 35, 36. Your stop would be under the pullback low, 26 and a half. MLTX exploded in June, flagged. We put a swing on it and ran up to the target. Then for the last 4 months, 3 months, it's been going lateral. It's got to get over 63. If it does, 70 and 80 are targets. But the stop now for me is under 49 and a half. MNSO, pop, flag, run, coil, another flag and another pop, and now a larger flag type pattern, maybe a coil. If it gets over 27, then your targets are 30 and 34. Stop though is under 22 and a half. MRAM, bad day on Friday. If you're getting up multiple times to get up to that range, it just cannot get through the 10, 50, 60 zone. If it does, $12 is your target. MTRX pops out, wedges, spikes, flags. Beautiful chart. I love the pattern. Friday wasn't a good day for it, but if it holds here, the target is 16, 17. Mechanics, love that chart, but it hit the target at the top of the channel and then rolled back like many tech stocks. This one's back down near support level. We don't want to see it break any further. My stop is going to be right there, under 33 and a half. Engineering construction firm ORN broke out of a base, retested it, and now it's run up nicely from 3 1/4 to 6. The pullback last week had it in a precarious position where it might retest 4 3/4, but I'm looking for a 6 and a half, 7 on the target. PAY breaks out of a downtrend, forms a wedge, pops out, wedges again, and now it's a kind of a coiling pattern. Might be a mini head and shoulders. You got to be careful here. Clear stop on the 14, over 17, 21 target. Palantir, it looked like a head and shoulders, but it broke to the upside, and then it rolled back again. Dangerous pattern, especially if the trend line breaks in the moving average. So stop under 1540. POWL popped and pulled back. We put a swing on it. Didn't really work great. It is a beautiful multi-month consolidation, but it broke Thursday, Friday. Be careful, it's in the gap and it could fill it down to 64. PTN, look at that pop on Thursday and a nice fall through Friday. And where did it get to? A massive, major 2-year declining tops line. Be careful. If it pops here, it's 3 1/4. If it doesn't, it may be 2. Junior semiconductor that is promising looking, but in a weaker group, might be vulnerable, might not be, but should it get above 10, I'm looking for 12. Remedy Global, well, look at this chart. 9 to 27 at triple. Now pull back on Friday. Should it extend, 30 is your target. Stop is under 24. Riovant, one of my top picks of the year in biotech. I thought it was going to be a bigger year than it's turned out. This one indeed has gone from the 8 range to 13 and a quarter before pulling back. It's right on support here, right on the trend line. Dangerous place for it. It could collapse. Be careful. Rover, look at this chart. Great chart. 3 and a quarter to 7. And trending towards, I think, 7 and 3/4. That's my next target. SFN, Sprouts Family Markets, also a beautiful rising channel for the last year and a half. It's taken it from 22 and 3/4 to the mid 40s, 44 change. There's a juxtaposition of resistance up there, so I'm not surprised it pulled back, but it's got very good momentum. Soleno, this is what I was talking about earlier. When a stock is in a coiling or consolidation or basing period like this, it has a massive gap like that. And then goes into a coil and it bears watching. It feels like it could be a $35 stock. It's only $22.80. This could explode, I think, if it gets above 26.5. Keep an eye. TAL, the Chinese educational stock has had a massive 1, 2, 3, 4, and maybe on the way in the 5th wave with a 1, 2, 3. Wave 4 could be consolidating in here. It could be a $13 stock. In the oil sector, Tidewater, I just wanted to show you this chart. It's gone from 10 to mid 70s, sevenfold increase, and still trending like, if oil stocks go higher and there's a war in Israel or something or whatever, a real war, this could be mid 80s. TNK, another oil and gas shipper, TK tankers, long consolidation after a big run up. Should it break out of this, might be mid to high 50s. TPST, another pop, coil or wedge, currently wedging. We don't want to see it, and your stop is under 330. Over 8.5, 9.5. We might see, mid-teens on the stock. UEC, a junior uranium stock, breaks out of a base and now setting up a nice little wedge pattern. Extension target 6 3/4, 7. ULBI, breakaway gap. Put a swing on it there. It popped again. It wedged. It popped again. Now it's pulling back. It did reach my targets though. At this point, I would stick with it until and if it breaks support. I would say under 9.5 might get me out. Vista Oil and Gas, another oil and gas stock that's been phenomenal this year, in the last 2 years, taking it from under 2 to the low 30s. Extension target now, 34.5. BRNS broke out a couple of weeks ago. I put a swing on it. It pulled right back. Friday was a particularly difficult day as it filled the gap, but it closed fairly well off the low. Let's just see what this happens. BSAT, in the midst of all this market drop, this has gone from 15 to 22, 50% run in the middle of a lousy market. Sign of relative strength, something we should be keeping an eye on. If it does pull back to 18 to 19 zone, it might be a really interesting entry opportunity. Stay tuned. Tech Trader swing, junior swing wave, and also one of my picks for the year back last year when it was trading about 3 3/4. Didn't make it up to double, near 7, but it's pulled back. Now it's broken back out again as wedging around 5.5. My target remains a retest of 7. That's it for the longs, folks. We have lots of shorts to talk about. Let's go over them. Well, a few new ones you're going to want to see too. Now, in Semiconductor Group, ACLS broke its trend line and broke support and maybe headed in a new downtrend. My targets are 137, 121, and all the way down to 110. Perhaps first target at 137 might be seen as quickly as early next week. It's broken. ALC, topping pattern, trendline break, bounces back to resistance after breaking down and filling the gap there, but has rolled over again. And now looking like this is high 60s, even low to mid 60s. AMPH broke down, bear wedged, broke down, bear flag. 1, 2, 3, 4. I'm looking for a 5th wave down. It gets me somewhere in the mid to high 30s. This one looks pretty juicy. AMR, Look at this little mini left shoulder, head, right shoulder, and breakdown. 1 day snapback failed at the neckline, or just beneath it. From the little bear flag and rolled over. It's right on the precipice of getting slam dunk, folks. Yes, it's an oil stock. You can see the potential for this to be, 200, 180, etc. Auto Nation, which has been on my Tech Trader boxes shorts list since it was 160, it's made it down to 132, and my next target is 122. BDC, which is a Tech Trader swing short there that didn't work, and then it finally rolled over and got crushed. Whoop. Yeah, and it looks like it may even go lower. Very bad chart. Builders first stars. Well, folks, and with the interest rates the way they are, builders and builder suppliers are not doing well. This was a beautiful stock. This went from 50 to 150 and change. Broke down, I showed you that bear flag, and it's broken down ever since, and it's going lower. 100 is my next target. BMEA broke down from the bear flag at 22 and subsequently been cut in half, reaching a low recently of 10. It doesn't look good. A new one, Coco Vita was one of the best performers in Wall Street the last year, having gone from 7 to low 30s. But look at this reversal, and now look at this pattern that looks like a left shoulder, head, right shoulder. It's a weak one, but any move under 23.30, we could plunge into the 20 and 17 range. This looks also juicy. CPA, South American Airline, broke here, snapped back right to resistance as the moving average has crossed over. It's not a 1, 2, 3. It doesn't look done, in my opinion, until we get down to probably 73.4. CROX has been on my short list for weeks, months now. Left shoulder, head, right shoulder, breakdown, bear wedge, breakdown, bear wedge, breakdown, bear flag. Looking for 75 and 65. The AR, a massive 2-year top, broke down hard and it hasn't even bounced. How bad does that look? I'm not going to be surprised to see this make a move to 30. Datadog, massive multi-year head and shoulders, but the key is a short-term pattern broke down from the big bear flag right to the moving average and failed. Now it's from the wedge and it's failing. My targets in Datadog are 75 and 64. Build a DHI, breaks down, fails, forms a wedge, fails, rallies back to the trend line, fails. Folks, they keep failing. Downhill racer, target 94, and then 88. DOX, AMDOX, breaks here, forms a beautiful bear wedge. It's rolled over hard and met all my targets for now. It needs a wave 4 before it goes lower. ETN, look at this head and shoulders, left shoulder, head, right shoulder, and a breakdown to the neckline. Immediate targets 180, secondary targets 160 or less. EXP also breaks down, forms a rising wedge. That's rolled over hard. First target near here at 150, second target at 138. FOUR as a Tech Trader swing short, lousy looking short. Failed on Friday and did an engulfing reversal. I think we're headed down towards 43. GMS. Another building material stock with a toppy pattern, broke down, bounced up. It's formed a down channel near the bottom of that channel. But it is a definite Tech Trader or boxer short and remains, even if it bounces, looking for targets in the 50 range. GRBK is a Tech Trader swing short after breaking the head and shoulders. It snapped back. Subsequently, it's moved from 50.80 to 37.89. It looks to me lower. Next target 35 and then 30. Gravity, something I just added. It broke its trend line. It formed the bear flag. It looks like the bear flag is breaking. And should this get under 62.5, a lot of room to drop. My targets are 55 and 51. HCA, head and shoulder top, breakdown, snapback, fail, breakdown, snapback, fail. Look, I can't tell you how far it goes, but I can give you a target about 225 or worse. Hologics, head and shoulder top, breakdown bear wedge. We told you about that one for weeks now. It failed at 76 and dropped to 66, but my target is all the way down here in the 60 range. HUBS, a new one of the best stocks on Wall Street for a long time. Take a look at the long-term chart. Well, let's put it this way. This rising channel broke, again with a breakaway gap. And when that happens, the trends will often reverse. This one, however, I was watching this, and this was a head fake because it looked like a bear wedge underneath the moving averages. And that normally will break to the downside. Instead, it broke out, sucked out the shorts, and rolled over. And right now, it's in a downward trend. There's a head and shoulder top. My next targets on this one are going to be down here at 365. IBM, head and shoulder top, bear flag, roll over, snapback, fail at the neckline, moving down again. I can see the stock at 132, even it's 125. INTT, a tech trader swing short, broke down bear wedge, broke down bear flag, and it continues to slide near the target of 13. KBH, another home builder, head and shoulder top, breakdown bear flag, perfect. Another lower low. I think we're going to have 38. Las Vegas, massive head and shoulder top. There's a neckline. It broke under it and snapped back and failed, then rolled over. It's got a bear flag here, folks. 41 and 35 are targets. Long uptrend in LW, Lamb Weston finally broke hard from the bear flag. Take a look at this. This little mini bear flag, and then from another bigger one, and then collapsed. This may have been earnings related. I'm not sure what this was, but it certainly didn't last long. Look at that plunge. 101 to 81, 20 points in that 4 or 5 day period. Now the technical snapback. It did reach near a support zone. MEDP, another new one, left shoulder, head, maybe a weak right shoulder and a bear flag. It's breaking down. Your target is 198 to 200. NVT, top head and shoulder top broke down. What I would look for in this one is a snapback to 47.89 and then a rollover to 42 and 40. OMC topped here, broke down and snapback failed, and that it's been stair-stepping its way down. Little bear wedge, another bear flag. Did reach my target zone though. Impinge, broke hard, bear flag. This is where I said this is a short, but it popped for a day or two and then rolled over. Look at that bear flag. That's where I put out a day trade, a tech trader swing short. It's dropped from 89 to 49. I think you might see, 40, 42 before it's over. SCI, massive 3-year top, and it's breaking. Next target 46. SDGR, tech trader swing short, but it broke down in front of the bear wedge. Another larger coil, broke down through key support there. It's all the way down to my major target near 22 from 59. Skechers, I love this company. I don't like this chart. There's a breakdown under support and a bear flag for me. Should this roll over, the target is 41 and maybe lower. SMCI, Wall Street favorite along with NVIDIA, they're both looking ugly. Left shoulder, head, right shoulder, and then a rally, just enough for one day to break it out and suck out all the shorts. And then from 317, it drops to 247 in a week and a half. If that breaks this line, we might see a stock at 200 or even 165. It says D, broke his big uptrend. I'm looking for a bounce back for a short that takes this eventually down to 115. SVXY. Now this is the VIX bear. Look at the head and shoulder top on this. If that doesn't worry you about the market, if this market does plunge, this is going to plunge with it. And I wouldn't be shocked to see this drop 8 to 10 points. Technoglass, which was a tech trader swing long for a long time when it broke out of this base, really had a beautiful run from 26 and doubled into the low 50s. But the rollover and snapback now has a platform forming that's a very negative declining coil, which if it breaks down, we're going to see 26. TMDX has been a complete disaster since it broke support from the little wedge. right in there. And you can see the move. It's gotten all the way down to my targets there, 40.41 from 98. And finally, Alta broke down from the big wedge, broke down from the little wedge. And this is where I said tech trader swing short. I think it was at 419. It dropped to 369. It is at support. If it breaks here, however, I'd be looking for 340. That's it, folks. I'll look at the indices, the underlying technicals, the NASDAQ 100 generals, the major ETFs that we follow every week, and then a list of 75 longs and about 45 shorts. And folks, this is a very, very critical time in the market, maybe as critical as any time we've seen in the last year or two. Either we have a massive rally off this level, and it may come from a dip first, or they crack them and smack them. We'll find out pretty soon, won't we? Not to be too dire, but enjoy the rest of your weekend. Let's hope next week gives us what we want. HB out. Have a good one.